Every year, trillions of dollars in illicit funds flow through the global financial system, hidden, disguised, and made to look legitimate. This is money laundering, and it's one of the most serious threats to the integrity of our financial institutions and economies worldwide. So what is money laundering? Money laundering is the process of making illegally obtained money appear legal. When criminals profit from activities like drug trafficking, fraud, corruption, or organised crime, they can't simply deposit millions into a bank account without raising red flags. So they launder it, cleaning dirty money through a series of transactions that obscure its criminal origins. But it's not just money. Consider high-value goods such as jewellery, watches, fast cars, and the increased use of cryptocurrencies with less regulation and inherent anonymity. We're at a point now where we can't just focus on cash anymore. The process of money laundering typically involves 3 stages: placement, layering, and integration. First, criminals introduce their assets into the financial system. Then they move it through complex transactions to distance it from its source. Finally, they reintegrate the clean money into the economy through legitimate seeming investments or purchases. However, it's never truly clean, as it has come from some sort of crime, which we call the predicate offence. The consequences of money laundering are devastating and far-reaching. Money laundering enables organised crime and terrorism by allowing criminals to enjoy their profits and fund further illegal activities. It undermines legitimate businesses. How can an honest shop compete with a front operation that doesn't need to make a profit? Money laundering also weakens financial institutions, erodes public trust in the banking system, and can destabilise entire economies. It distorts markets, facilitates tax evasion, and increases corruption. Developing nations are particularly vulnerable, where laundered money can influence elections and undermine democratic institutions. This is where anti-money laundering, or AML, comes in. AML refers to the laws, regulations, and procedures designed to prevent criminals from disguising illegally obtained funds as legitimate income. The AML process works on multiple levels. Financial institutions are required to implement robust programs that include customer due diligence, knowing who their customers really are through identity verification and background checks. They must monitor transactions for suspicious patterns, like large cash deposits, rapid movement of funds, or transactions with high-risk countries. When something looks suspicious, institutions file reports with government authorities like FinCEN in the United States or the National Crime Agency in the United Kingdom. Banks employ sophisticated software and trained compliance officers to detect red flags, and they're also required to keep detailed records. Internationally, the fight against money laundering requires global cooperation. The Financial Action Task Force, or FATF, sets international standards and evaluates countries' compliance. The United Nations Office on Drugs and Crime provides frameworks and assistance, while organisations like Interpol and the World Bank work to strengthen AML systems worldwide. Regional bodies like the European Union and regional FATF-style organisations ensure consistent implementation across borders. Money laundering threatens us all, but through comprehensive AML efforts, we're fighting back. And here's where you come in. Whether you work in finance, compliance, law, or business, AML training and certification can make you part of the solution. Programs from organisations like ourselves at the International Compliance Association and other professional bodies can equip you with the skills to detect and prevent financial crime. In an increasingly complex financial landscape, AML professionals are in high demand and on the front lines of protecting our global economy. Consider taking that first step today.